Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of corporate filings to uncover the real story. And today we're diving into a report that is all about doling out cash. Alright, so we've got a filing from Cantor Fitzgerald Income Trust Incorporated, and it is a current report, meaning something notable happened that they need to tell us about pretty quickly. What is the big news? Well, it looks like they've declared some distributions, a fancy word for paying out money to their shareholders and unit holders. The report essentially tells us that on the 6th of February 2026, the company's board officially decided to pay out money for the January 2026 distributions. This is pretty straightforward, but what is really interesting is the breakdown of exactly how much each class of shares and units is getting. They're laying out the gross distribution amounts per S-share or unit for different classes. For example, Class I shares and Class I operating partnership units are set to receive $0.08536 each. Then you have Class D shares getting $0.08109 and Class S and Class T shares both getting $0.07082. There are also other classes like Class IX and Class IX also at $0.08536 and Class TX at $0.06826. Finally, Class T operating partnership units are getting $0.07081. Now these are gross amounts, which means before any fees are taken out. The net distributions meaning what you actually get after fees are calculated, and then they're going to be paid out around February 9th, not too long after the official declaration. Here is a key point though, this cash payout might not all be coming from the company's daily earnings. Some or all of it could be coming from other sources, which is something to keep an eye on. This particular statement is what we call a forward-looking statement, which is basically a heads up from the company that their future predictions might not perfectly align with what actually happens. They're saying that despite their best estimates and plans, actual results could be quite different. They're warning investors not to put all their trust in these future predictions. Looking at this report, the main story is distribution declarations. It is a pretty simple filing on the surface, just announcing payouts. There aren't any complex financial statements or deep dives into performance metrics here. It's a Regulation FD disclosure, which is all about ensuring that all investors get the same information at the same time, basically preventing any unfair advantages. Now, from a big picture perspective, Cantor Fitzgerald Income Trust Incorporated is a real estate investment trust, or REIT. REITs typically invest in income, producing real estate, and are legally required to distribute a large portion of their taxable income to shareholders annually in the form of dividends. This filing is right in line with that core business model. What this specific filing tells us is that the company is continuing its practice of distributing income to its investors. The fact that they are paying out these distributions on different classes of shares and units at varying rates suggests a careful management of their capital structure and investor classes. The note about distributions potentially coming from sources other than operating cash flow is a common disclosure for REITs, especially when they want to maintain a steady dividend payment, even if short-term operational cash flow fluctuates. It's not necessarily a red flag, but it does mean investors should understand where the money for these payouts is coming from. The most important takeaway is that the company is functioning as expected by paying out its obligatory distributions. The amounts themselves are quite specific and are likely tied to the net asset value or NAV of each share class, and are designed to meet a certain annual yield of 5.00% of NAV. These types of distributions are what many investors in REITs are looking for income stability. So what is the verdict here? Cantor Fitzgerald Income Trust Incorporated is doing what it is supposed to do by paying its shareholders. The details in this filing show a calculated approach to distribution based on different share classes. The slight nuance is the mention of payouts not solely from operational cash flow, which is a common practice for REITs to ensure consistent returns. It highlights the nature of real estate investments where cash flow can be lumpy, but income generation can be steady over the long term. For investors in Cantor Fitzgerald Income Trust Incorporated, this is likely good news signaling continued income generation and distribution. It reinforces the idea that this is an income-focused investment. There aren't any major risks or opportunities revealed in this specific filing beyond the general risks associated with real estate investments and interest rate environments, which are typically detailed in their larger filings like the 10K. Alright, that is our breakdown of this filing. What is your take on these distribution numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.